Here's a detailed summary of Unity Technologies Q2 2025 earnings call. Overall financial performance. Unity Technologies announced a strong second quarter of 2025, exceeding expectations on both revenue and adjusted EBITDA. The company is experiencing a pivotal moment driven by product innovation and enhanced customer value, particularly with the early success of its AI-driven Vector technology. Key financial metrics. Revenue. Total revenue, $440 million to $450 million. Guidance for Q3. Gross segment revenue, $287 million, down 4% year-over-year, up 1% sequentially. This was driven by the Unity ad network, which saw significant performance from Vector, partially offset by declines in other ad products as resources were redeployed for Vector's launch. Create segment revenue, $154 million, up 2% year-over-year and sequentially. This was bolstered by double-digit subscription growth. Excluding a $21 million non-strategic Create revenue lap from the prior year, strategic Create revenue grew 16% year-over-year. Profitability. Adjusted EBITDA, $90 million, representing 21% margins. This exceeded the high end of guidance, attributed to operating leverage, cost controls on headcount and cloud spend, and investments in Vector and AI. Adjusted gross margin, 83% free cash flow. Record free cash flow in Q2 at $127 million, a $47 million improvement year-over-year. This was driven by strong profitability and publisher payment timing. Management's forecasts and future outlook. Q3 2025 guidance. Total revenue, $440 million to $450 million. Adjusted EBITDA, $90 million to $95 million. Gross segment, mid-single-digit sequential revenue growth, driven by continued strong performance in the Unity ad network, Vector. Stabilization is expected in non-Unity ad network products. Create segment, slight sequential decline due to a large customer win in Q2. Excluding this, strategic Create revenue is expected to be up sequentially and high single digits year-over-year. Long-term outlook. The company anticipates Unity Vector will continue to strengthen, with ongoing AI quality and efficiency improvements. A significant competitive advantage is expected from leveraging Unity's deep consumer understanding as the operating system for games, with impacts from this data integration anticipated starting in 2026. Increased investments are planned for AI in the core Unity content creation experience. Opportunities for margin expansion and operating leverage are expected to continue as the ads business scales. Significant risk factors. Forward-looking statements. The transcript notes that forward-looking statements are subject to risks and uncertainties that could cause actual results to differ. Specific risks are detailed in their SEC filings. Scalability of Vector. While performance is strong, there are some customer pushback on the scalability of Vector, requiring ongoing investment and fine-tuning. Competitive marketplace. The ad market is highly competitive, with sophisticated companies vying for share. Reliance on AI development. Future growth is heavily tied to the continued successful development and deployment of AI capabilities like Vector. Highlights. Unity Vector performance. Unity Vector has exceeded expectations, driving strong sequential revenue growth in the Unity ad network, 15% sequential growth in Q2, with continued momentum into Q3. It's expected to drive double-digit sequential growth within the ad network in Q3. Create segment stability. The Create segment shows consistent strength with double-digit subscription growth and increased adoption of Unity 6. Strategic partnerships. New multi-year partnerships with Tencent, Scopely, and Nintendo were announced, highlighting a shift towards creating new business opportunities by leveraging Unity's platform and portfolio. Expansion beyond gaming. Continued momentum and deepening relationships in sectors like automotive, BMW, Mercedes-Benz, and healthcare. Spectrum Medical demonstrates significant growth opportunities outside of gaming. Operational efficiency. The company is successfully balancing investments in growth initiatives with tight controls on costs, leading to improved profitability and free cash flow. China market growth. Significant sequential revenue increase in China across both Create and Grow segments, with Unity's ability to support the entire ecosystem, including Open Harmony, being a key advantage. Lowlights. Softness in other ad products. The launch of Vector led to a temporary temperance in overall ad segment revenue due to resource redeployment, though stabilization is now expected. Non-strategic revenue lapse. The Create segment saw a lap of $21 million in non-strategic revenue compared to the prior year, impacting year-over-year growth comparisons. Perpetual deal recognition. A specific perpetual deal component was called out as not being recurring, highlighting the need to clearly define revenue streams. Most important statements from management. Matt Bromberg, CEO. We believe that the second quarter of 2025 will be remembered as an inflection point, where accelerated product innovation and enhanced delivery of customer value came together to spark demonstrable sustainable growth, led by the full emergence of Unity Vector, which has far exceeded our expectations at this early stage of its development. Performance advertisers consistently increase spend up to the limit of their return requirements. As we strive to deliver better returns, we expect our partners will continue to invest in growth and our business will grow alongside. We've not yet tapped into our biggest competitive advantage, the deep consumer understanding we possess by virtue of Unity's position as the operating system for games globally. Our rededication to quality, stability, and improving the developer experience is catalyzing strong financial results in Create, including another quarter of double-digit subscription growth in Q2. These new partnerships are not built around selling seats. Rather, our goal is to create new business opportunities for our partners by leveraging our platform and portfolio of products in new ways. Jared Yaws, CFO. Unity exceeded the top end of our guidance on all measures in the second quarter. Revenue exceeded the top end of our guidance by $16 million, with adjusted EBITDA coming in $15 million above the top end of our guidance. Our aggressive stance on improving efficiency is also allowing us to simultaneously invest behind high-impact initiatives such as driving an aggressive roadmap around Unity Vector and incorporating AI throughout the editor experience. Unity is also just starting to benefit from improved operating leverage, supported by adjusted gross margins of 83%. We are seeing strength on strength. So I think each month was better than the last over the course of the second quarter. That strength has continued in the month of July and into August, which really what gives us the confidence to talk about mid-single-digit sequential growth in our overall Grow business in the third quarter. The scale of our Grow business is such that improvements in that metric is really going to come from customer spend increases in Grow.